Guess it would help if I turned my mic on. Rookie mistakes, man. Good morning, everybody. It is Thursday, June 1st. May has finished. We're now into June, month number 6, 2023. That means we have about 6.5 months to go to get our $2 million funding challenge. So we are here every day, Monday through Friday. We are taking a 10K account with Bespoke Funding prop firm, and we are growing it to over $2 million in funding to manage. My goal is to do that by the end of this year, and I think we can do that. So welcome in Venator Trading. I had to put a little new background up here because I decided to wear a black shirt, and it was messing up with the camera thing, so I put up this background. I don't know, man, I like it. It's all right. It's more branding, I mean, what can go wrong with branding? So, hey, good morning, Jack. Hey, you took my EU trade yesterday. Man, good for you. Good for you, bro. That was a sniper entry. We're going to go over that here in just a minute. Yeah, what a day yesterday. Yesterday was nuts, man. So much to talk about, and I'm kind of glad it happened because it gives me a lot of things that I need to discuss with everyone today. We'll see if more people pile in here before we jump into that, but yeah, I mean, the debt ceiling got passed by the House yesterday, and so now you're seeing some pullbacks on the dollar and the foreigns a little bit here. We've got some red folder news at 10 o'clock this morning. So everything is jumping and hopping now here towards the end of the week. You got NFP tomorrow. But man, we found a great setup yesterday, and we were fortunate to get in it. Post the trade ideas during live stream in Twitter too. Yes. Simhadri, I hope I said your name right. I post everything in Twitter. Even if I'm on the live stream, I will take screenshots and I'll put all of my entry details on Twitter, whether I'm on the live stream or not. It all goes up on Twitter. I just want there to be complete transparency through this whole thing, and I don't want anybody to be able to look back at some point and be like, oh, well, you didn't call that, and you just did that on your own, and blah, blah, blah. So I'm really just trying to try to be as clear as possible the entire way through this. So, man, it was crazy yesterday. But I'm looking forward to seeing how the week ends. We might find another good setup here. We've got some news opportunities both today and tomorrow that might provide some volatility for liquidity grabs. And so anytime we can get some volatility and move towards liquidity, then that has a potential setup for us. So we'll see what happens today, man. I mean, we're going to be back at it. We're here hunting every day, and I'm not anticipating taking a trade today. Every day I come into these markets, I'm expecting myself not to trade, and I'm never disappointed. If I don't trade, I'm never disappointed. When I have the expectation of I'm not going to trade today, I never get disappointed. I'm never let down. And if I get to trade, it's a positive because that means an A+ setup appeared. That means that trophy buck walked out, and I was able to take my shot. I kind of look at it like this. Here's another way to look at it. I look at it like this. I look at it like, as a hunter, on my Venator Trading, I've got the kind of spearhead or arrowhead thing in my name right here. And I did that because I think back to when, there weren't like firearms to hunt with, and you had to use a bow and arrow, or you had to use a spear or whatever to go out and provide for your family. Well, If I have one bow and arrow or I have one spear and I have one shot to feed my family for the day, why would I use that spear or that arrow on a less than perfect opportunity for me to guarantee that I'm going to feed my family that day? And why would I use that arrow to kill uh, a turkey or, a rabbit or a squirrel or a raccoon when I could take down a buffalo and I could feed my family for a while? So that's how I approach every day. I've got one shot today. I have one bullet that I can shoot. So I'm going to be very picky and I'm going to be very choosy and I'm going to be very patient. And that's how we trade. That's how we trade. So a few more people are coming in. So good morning, guys. Welcome into the stream. It's 7 a.m. here in the States, New York time. It's 6 a.m. here in Houston, where I'm at. Uh, lunch lunch hour over in London, it looks like, and Tokyo. Man, you guys are getting your nightcaps ready and ready to pile into bed. So wherever you're at, glad you guys are in. Hey, Tilo, welcome back, buddy. So man, yesterday was nuts. I'm gonna go ahead and start talking about that a little bit. Uh, South Africa. All right, 1 o'clock there, huh? Is it This is gonna make me look like an idiot, probably, but you guys have opposite seasons down there, right? So you're moving into winter months in the southern hemisphere. Is that correct, or am I just making that up? Aren't they opposite, northern and southern hemisphere on the seasons, or is that just am I just stupid? I'm probably just stupid. Most likely I am. Need to stay in my lane. Oh, that is correct. Good. Cool. It is getting freaking hot here in Houston. Houston, man, the humidity here in Houston is otherworldly. It really is. I'm sure there's other places in the world that compare, but in the States, there's not much more humidity that you can get than right on the Gulf. Uh, so when it's like 90, the feel like if the true temperature is 90 degrees Fahrenheit, which I don't know what that is in Celsius because I know most of the rest of the world uses Celsius, but 90 degrees Fahrenheit here plus the humidity makes it feel like 100 to 105 when you go outside. It's like when you walk outside, you can take a shower and then walk outside and you haven't even done anything and you're just sweating. So, and it hasn't even gotten into the hot summer months yet, but the humidity has already arrived. So like I think right now today the high is supposed to be like 89, but it's gonna feel like 98 outside here in Houston today. Uh, so I'm kind of jealous of you down there in your winter season approaching. It's probably amazing weather, or at least I hope it is. I know everybody has their different vibes on what amazing weather looks like. Um, so yeah, let's get into some charts, man. Um, let's look around and see what's going on, and then we'll get back over here and talk through what happened yesterday because that was nuts. All right, our dollar. We've had our debt ceiling bill that was passed by the U.S. House yesterday afternoon sometime or last night. I can't remember when. So it's cleared the House, which was the biggest hurdle. The Senate's controlled by the Democratic Party, and the Senate will definitely pass that bill. So it looks like debt ceiling is going to get passed, and that means people are probably going to pile into the markets a little bit more, and that could mean risk off, and the dollar could pull back a little bit. Plus, we just started June, so if the dollar is going to be bullish for June, you would expect at the June opening in this first week, for if it's going to make a low, the month of June would make a low. Down below. Let me turn this off so we can see this clear. Here's our monthly chart here on the dollar. We just had May finish out, and now we've June has opened, pushed up a little bit, and is currently pulling back down. I would expect June to push down a little bit as we get into the first part of June, and the Fed's going to have to sell and raise about $1 trillion, and they're going to have to sell all kinds of bonds and stuff, to treasury bonds and 10-year bonds and whatever. They're going to have to sell all that debt to raise that money. So I would expect the dollar to retrace a little bit here in June. I don't know how far, but you can see there's some, you've had 3 strong weeks of just straight bullish dollar here. We've traded up into this weekly order block right here. And we're falling away from it now as we've started June. So we'll see how this week closes out. But again, here's your daily. You can see you've got I'll turn my stuff back on because we have all this marked up. Here's our relative equal lows right here. We popped into this OTE, the optimal trade entry from, which is just a retracement of this leg all the way back down from over here. We filled in that volume imbalance. It has held nicely. And so I would expect our drawn liquidity to be right here on these daily lows, and you'll see it more clearly here on the 4-hour time frame. That's our drawn liquidity. And so I'm expecting the dollar to kind of pull back down into that a little bit. You've had a run of buy-side liquidity. This is the current dealing range, so there's liquidity resting below here. So that's kind of what I'm anticipating, is a little bit of a weaker dollar, which would bring some relief to the bearish nature of the foreigns. Oh, I do need to update my stats on the screen. You are right. I totally forgot about that. Man, what would I do without you guys? Let me get in here. Let me put that up. Good call. Let's see if I can edit it. Last time I tried to edit this while I was live streaming, it got all screwed up. All right, so we're on day 4. Our current balance is 221.08. And we, fortunately, almost embarrassingly, had one winner yesterday and one losses. I'm just going to put wins, losses, break evens. Yeah, that's fine. That's right. All right. Good. Thank you for telling me that. I was thinking about that when I came down here this morning, but I couldn't find my Oakley hat, my white Oakley hat, and I just got distracted, and I forgot about that. So thank you, Jack. All right. Hey, Sam. Good day to you, buddy. So yeah, I'm kind of expecting our drawn liquidity to be down here, and to see some bearish retracement now for the dollar, and probably to at least, I don't know if we get down here all the way today, but with NFP and stuff tomorrow, I think this week we tap into this, and then if it wants to go higher, maybe it does from there. Maybe this is the low of the month for June. Or we tap back down into some of these, see if these become inverted PD arrays down here. But we'll watch and wait. But that's kind of my bias for today, is a bearish dollar and bullish on the foreign pairs here. Pound, you can see with the dollar falling, the pound is rising. What's up, Beeswax? Welcome back in, man. Pound's rising, euro's rising, everything's rising. and that's what I would anticipate. I would want to see for us to get involved here on a long position. I would want to see some kind of pullback and grab some liquidity and retrace some of the London move up on either one of these positions here. You can see we've had liquidity, we pulled liquidity here and we broke higher and have displaced above. So this right here is a 30-minute, these two candles here are a 30-minute breaker block. We grab liquidity, we displaced displaced higher above it. And it has now grabbed liquidity, these relative equal highs on the pound, and hasn't quite gotten up there and grabbed that swing high yet. But, all of this stuff here is up for grabs now. So I would just need to capture a 1 to 2 in here. So I don't need to get a massive run of pips. I just want to get, there's not a really clear area of liquidity here on pound that I would be identifying currently. This would be the closest spot, and this would get you back into a discount area of this area here. So if we could get a pullback in New York and maybe this news event, red folder, we have ISM manufacturing coming out at 10, perhaps we get some volatility where we get a liquidity run and then some displacement. So I don't know, we'll watch and wait and see. Much like yesterday, we're here and we're just sitting in our tree stand and we're being quiet and we're watching to see what comes out. But I do think Euro has built up a little liquidity here, and I think we could get a retracement back down into this zone somewhere down in here. That's where I'd like to see it fall. The current 4-hour candle on dollar has left no wicks, and we all know no wicks left behind. So, next 3 to 4 hours, I would anticipate that not staying like that. Gold, this was our loss yesterday. Very unfortunate because we just mistimed this really, and I'm going to go over why. I'm going to see if some more people pile in here. I don't want to have to explain this twice because people may ask about it later in the stream this morning. We just mistimed this, and it ended up not being a plus setup, and at all. It was a mediocre setup. But with Euro running as aggressively as hard as it was, and the dollar displacing below, I put the entry to this as this down candle was down here, and I was hoping it'd come back up and retest and then fall away. But that's what you get for hoping and not really leaning into your system. So this is all good. I'm glad this happened yesterday. I really am, because it gives us stuff to talk about. So, yeah, Sam, so I'm trading on MT5, and it's called Trade Assistant, and it's a EA, an expert advisor that you load into the MT5 software. I think I tweeted it out yesterday, the link to that already. But if you just Google MT5 Trade Assistant, then you can see it. It does cost, I think it's like $90 or something like that, but it's such a lifesaver. You can literally drop lines very much like you can on TradingView, like your short and long tool on TradingView that I have up there right now. You can do that same thing on Trade Assistant on MT5. You put in how much you want to risk, either dollar amount or risk or percentage of balance. You can do either one. And it auto calculates for you. And then you set your order. You just click either sell or sell limit or sell stop or buy limit, buy stop. Yeah, it's got a lot of features. You can set it up to move to break even after it moves a certain amount up in your favor. You can set trailing stops on it depending on how you manage risk. It is a great tool. It's called Trade Assistant. It's on MT5. When I'm not at my computer, I use, yesterday when I took this trade, I was not at my computer, and I used the MyFX has a lot size calculator on their app. You just, if you Google lot size calculator, MyFX is one of the first one that comes up. And I just put in all my information that it asks for. It asks you, account balance. Do you want to, how much do you want to risk? How big is your stop loss? How many pips is your stop loss? And you hit calculate, and it tells you exactly how many lots you should be using to get the appropriate risk that you need on that. Baby Pips has them. There's several out there. My son's a software engineer, and I'm talking to him about coding my own trade assistant for MT4 and MT5. This one that's on here, it's okay, but it doesn't need all of it, and it'd be cool just to have one branded to Venator Trading. And so I'm having him look into that. Maybe he can code up a Venator Trading trade assistant, and I can make that available to you guys for that. That'd be kind of cool. Anyway, yeah, so gold right now is retracing back up. I don't expect gold to trade back above the daily high. With the debt ceiling now a deal in place, the House has passed it. That means the Senate will likely pass it here today, tonight, tomorrow, sometime soon. They'll start issuing. I don't think the gold is going to run higher here. I think gold is more likely to run lower into this drawn liquidity down here. You've got relative equal lows here. You've got a lot of imbalances to fill in down here. So I'm still bearish on gold right now. I know it's moving up higher, but overall, I think through at least the first week of June or so, I think we're going to see bearishness on the dollar. I mean on gold. US 30. There wasn't much reaction overnight with the debt ceiling deal. Again, this US 30 has just been trash for me. Like, I want to see things start trending, and this is not a trend. This is, what the hell is this? This is not a trend, right? Nothing's moving. We're slightly coming back down and rebalancing some of these imbalances here, but I want to see something. It's just indices just don't do it for me right now. They just don't do it for me. Like, if you look back in March and April and you there were some good opportunities here on this run. There were good opportunities on this move down. But now it's just ugly. There's no reason whatsoever to touch the indices right now. It's still inside of this 3-day dealing range, and we need to see something happen. And maybe that's today. You got news. You got NFP tomorrow, so maybe that's kickstarts something for the indices to get their butts in gear and provide some decent price action. So we're looking. I'm anticipating a retracement from these New York. It doesn't have to be super deep. It doesn't have to come down to an OTE level for me. It may. There are some no wick candles down here. This big one right here is the first one I would be interested in seeing what happens on a reversal. So, yeah, I just want to see what happens in this area. And again, because we've got some red folder news at 10, I don't know how much movement we're going to get, but we'll be patient and watch and wait. On the 5-minute, you can see more clearly this drawn liquidity here and into these, rebalance some of this and get us closer to a discount area. The true daily open was way down here. I don't know that it's going to come all the way back down to the midnight open price here. That would get us into a true discount area. I just want to see how it reacts after it grabs some liquidity here. I'd like to see it kind of engineer some liquidity maybe over the next hour or so. Just kind of come back down, get into a range, maybe come back up, leave some equal lows, and then later this morning we get that drop and then displacement back up, and we can maybe get a 1 to 2. All right, so I'm going to talk through what happened yesterday, guys. I am so happy. I have mixed emotions about yesterday because I'm glad that I made a mistake. I'm glad that I took a loss, because for the new people that are just now joining the stream that weren't here for phase one and phase two, we only had one loss out of both phases. Like two phases combined in 13 trades, we only had, or 10 trades, we only had one loss. And so people often come in to watch streams and they watch funded traders and they look at their mentors, and your first experience with them, you're like, oh, I'm so excited, I can't wait. And then they post a trade, and the first one they post is a loss. And people get so, oh my God, what am I doing? This guy's an idiot and whatever. I'm going to take losses. I'm glad I took one right out of the gate. I'm glad that it happened, because it was on a less than A plus setup. And I'll explain why in just a minute. And I'll explain what I was thinking, because I was away from my computer. Well, I was on I had my laptop with me and my phone, and I was trying to get stuff up on Twitter real quick and manage the trades on MT5 and get it all in so that I could be clear and authentic. If I wasn't having to think about all that, I don't know that I would have made this mistake, but because I'm trying to be available online for the small community that we have right now that are kind of following along with all this, I got rushed and I made mistakes. This mistake happened to play out in our favor. So let me walk through what we were looking for and waiting for. You'll remember in our stream yesterday, this whole time right here, I had said I want to see price come up and stab liquidity, and then I wanted to see displacement away, leaving behind a fair value gap with a breaker block. I talked about that the entire stream. We got off right about 9 o'clock, so we got off right about here. And about 45 minutes later, that news hit. We get our stab above liquidity, and then we get displacement down. And what a beautiful trade. It really was. This is what an A-plus setup looks like. You get a very clear drawn liquidity where price runs, buy stops. All of this liquidity, it had engineered liquidity here, and it reached up into here, and it reached up into our 15-minute fair value gap here. All of that we identified yesterday on the live stream. Go back and watch if you weren't here. We get the displacement, and this is what displacement looks like. After you get a run on liquidity, you get clear displacement. I mean, and this is why the euro dollar was an A-plus setup and gold was not. And we'll talk through what happened with gold. You get this strong displacement, and then it doesn't immediately come back up. It keeps going a little bit before it retraces. Leaves behind a beautiful breaker block, a fair value gap nested inside of a breaker block, and I targeted about 50% of the breaker block was where I was looking at getting into, which is also just back above the premium level. It got back above the 50% level of that large move down. So all of that is why I put my entry right there. And you can see that thing got just sniper entry. Like it just wicked it in, and it couldn't have been more beautiful. And then literally in 10 minutes. So you get wicked in, and then on the next 5-minute candle, you hit take profit. Beautiful, beautiful entry. Beautiful setup. Beautiful. Like, this is what an A-plus setup looked like, guys. Take a screenshot of it, whatever. This is what an A-plus setup looks like. It's what all the trades we took in phase one and phase two, they all look like this. This is what it looks like, and this is how you have to be patient. This is where you take your one shot, one kill, and you're done. You get your 1 to 2. I don't care that it came all the way down here. Don't care. All I want is 1 to 2. I'm up 2% on my account. and this was a mistake. This trade should have been canceled. But like I said, because I was watching gold and trying to post everything on Twitter, I had placed this trade when I called it. I called this live on Twitter first. This was the first trade I put on Twitter. Okay. Then, as it's breaking down about somewhere right in here, I see that it's going to reach for these lows, and I'm like, man, the chances that it's going to get a pullback all the way up here, the further it runs away, the less likely it's going to come back up to my entry. After this candle here closed and this one starts moving down lower and takes out these lows, I was like, yeah, this is probably not going to work. And so I'm watching this happen, and at the same time, I'm flipping through pound, and I'm flipping through dollar, and I'm flipping through gold. And in gold, I see something very similar happening. We get our run on liquidity that we had identified up here, this buy side liquidity up here into this fair value gap. We got that. As news hit, it runs liquidity, and then we get displacement back below, and we break and displace below this candle. But look and notice what happens after this candle displaces below. What happens? Does it continue? Look at euro. See how it displaces and then it continues a little bit? It doesn't just immediately displace and then run right back up, right? Gold breaks it, and then immediately, right the very next candle after it breaks, it pulls back up inside that breaker. It doesn't continue to drop. So, and then the very next candle, it reaches into that fair value gap. And it was on this candle, this down candle, is when this candle was just about to close. This candle was just about to open. And I was like, I think it's going to come back up and retest this fair value gap again. And then it's going to fall away. And that was a hope. That was anticipation. This was not an A+ setup. You can see the difference. I hope you guys can see the difference here. You have displacement all the way through aggressively. It doesn't just stop after it breaks. It kept going. Then it pulled back. And on gold, it broke that level, but then it immediately returned. And it wanted to make a bigger dig into this buy side liquidity. And it eventually did, like, reach back down exactly to where we intended it to. But it didn't. This is not an A+ setup. This is a hope and a prayer setup. That's what this is. And I called it, and I put it on Twitter. And if you took it, you took it. That's your decision to take. It was under. I get that it was under my advisement that this was an A+ setup. As soon as it starts climbing back up in here, I'm looking at this going, oh man, like it's about halfway up into my stop loss. I'm not going to move my stop loss. I accept a loss. As soon as I place a trade, I accept the loss. If I put a sell limit in and it gets triggered, it's going to have one of three outcomes. It's going to hit my stop loss, we're going to move to break even, or we're going to hit take profit. That's it. I said 4. It's 3. 3 things. That's the only thing that can happen. And so once I'm in the trade, I'm like, well, probably going to take an L on this. This was not an A+ setup. And I was mad at myself. I was upset that I took a less than ideal setup here. And some of it was that I felt rushed. Some of it was I was watching euro dollar tank, and I got into it. So this still happens to me. This still happens to professional traders, funded traders, full-time traders. This still happens. Don't think that because you become a 6-figure funded trader and you're getting payouts and you can leave your job, that you're not going to screw up, that you're not going to make a mistake. As patient as I am, as self-disciplined as I am, I'm still human, and there was a lot of factors playing into this. All of that to say, they're not excuses, but I was not self-aware enough in the moment to recognize what was happening. And so that's what happened. And I tweeted out once this gold trigger got triggered in, I said, hey, you should cancel that EU order because If you're risk for me, I have a 2% risk, a 2% daily loss limit. That's my personal loss limit on the day is 2% of my account balance. So if I have two sell limits in the market ready to get placed or ready to get triggered, as soon as one gets triggered, I would cancel the other, because if they both get triggered, I'm now risking 4% because I'm risking 2% per trade. So I needed to cancel EU when the gold trade got triggered, and that's why I called out, hey, cancel the EU trade. Gold is in. But while I'm tweeting that, I immediately come back and I'm just watching the chart, and I forget to open my MT5 account and cancel the order. So stop loss gets hit, whatever. It gets slapped. I took it on the chin, and I wasn't mad about taking a loss. I'm never mad about taking a loss. I was upset at myself for having the lack of self-discipline and self-awareness to recognize what I was doing in the moment, taking a less than A+ setup. So I'm not mad about taking a loss, but I am more disappointed in myself in how that all played out. And it's a lesson learned, and you move on with it. And so I was like, cool, we're down 2%, and I've been down 2%. We started phase 1 with a loss. When we started this challenge, the very first, I don't know whenever the first trade happened. I don't know if it was day 1 or day 2 whenever we took our first trade, but it was a loss. And so I was like, cool, I know what my win rate is, and I know one winner gets me. This is the beautiful part of 1 to 2 risk reward ratio and a 50% or plus win rate. One loss gets eaten up, and you're in profit on the next win. So fortunately, I guess, the EU trade did work out. It could have burned. It could have burned really, really bad. EU got triggered in, and it could have torched that stop loss, and I would be down 4% today. That's what happens when you don't pay attention. That's the danger that we live in this business. And you have to be aware, and you have to be in control, and you have to be at the top of your mental game all the time, because crap like that happens, and that would have sucked. But the beautiful part about it is, if it had hit my stop loss, I would have been down 4%. Then if the next trade is a winner, the whole account's back at break even. So again, this is the beauty of 1 to 2 risk reward ratio and a plus 50% win rate, which is currently what we're operating in as an above 50% win rate. It worked out yesterday. It was a mistake. It was a mistake that ended up being good luck. And here's the other thing I want to say about that. Good luck is the worst thing that can happen to you. Like, I'm glad that trade worked out, but if you were trying to follow along and trade along with me yesterday on Twitter and keep up with everything, that's a bad good luck scenario. Like, I'm grateful and fortunate that mistake worked out in my favor. This was the A+ setup. This is what we should have stuck with. There was not an A+ setup on gold. So I hope you guys understand why that is. This one was just a beautiful trade, and it worked out. And it was the weirdest feeling in the world when I opened because I was putting together an update for Twitter of the day. Like, I took my trades. Okay, I'm going to go up and I'm going to update. Here's where the account stands now. I was working on the short. Like, okay, I need to put a short together and on YouTube so everybody kind of knows. Here's a quick recap of what happened today. I opened my MT5 account to grab a screenshot and find out the exact account balance, and it's $10,221, and I'm like, what the hell? And then as soon as I saw it, I was like, oh my God, I didn't cancel that EU trade. And the whole time, I was tweeting pictures of the EU trade from TradingView onto Twitter saying, "Man, if you took that, good job," or "Oh, it just hit take profit. I hope you took that. I hope you guys took that." I took it, and I didn't even know it because in my head, when I tweeted out "cancel EU," for some reason my stupid brain took that as you just canceled EU, but I never did. And it was so very fortunate that that ended up happening. So the good news is you get to see what happens when you take a loss and then you take a winner. That one loss is more than overcome by the one winner. So this is the beauty of risk reward ratio and how it's and having a fixed risk amount saves your bacon. This is how it plays out. You take a loss, you take a win, you're a 50% win rate and you're 2% in profit. So I feel very fortunate about that. That's the way it worked out. So for now, that's kind of my rundown on what happened yesterday, and it's a great example of how professional traders and funded traders make mistakes. And this is why, if you're following along with me, and please, the danger of me doing this, the danger of me doing this and walking you and holding your hand and taking you through this whole process is uh, that you're less likely to take responsibility for your own account. And, you know, when things go well, you're going to love me. And when things go poorly, you're going to hate me. And I did that. I felt like that about a lot of um, mentors or people that I were following. I'd be like, "Oh, this guy's amazing," and then he'd lose two in a row, and I'm like, "Oh my god, he doesn't know what he's doing," and he screwed up my account. You have to take personal responsibility for your challenges and your accounts and your trades. If you're putting trades into your trading terminal, MT5 or MT4 on your phone or on your computer, you are doing that, not me. I'm just showing you. I'm showing you and demonstrating how to do this. That's the whole point of this. Spend $100 on a 10K account, and with that $100 investment, grow it to manage a seven-figure, $2 million account with a $100 investment. That's what I'm demonstrating you on how to do this. So again, feel very, very fortunate that was not worse than it could have been. So here's why I'm anticipating a retracement, just to get back into our charts here a little bit, and then I'll look over here in the chat and see if you guys have said anything interesting over there or ask some questions. We've grabbed some buy side liquidity here. We failed to displace and make a new low. So you can see we grabbed liquidity, we grabbed a deeper liquidity, and now we've come back up. We've reached back into a volume, buy side imbalance, a fair value gap here, and we've displaced higher after grabbing liquidity under here. So now we've grabbed some buy side liquidity. Here's our next draw on liquidity up here at this level. This big imbalance and these relative equal highs would be our next draw on liquidity here. I'll mark it on the chart. I don't usually have all this stuff on my charts, y'all, but because we're on here on the stream, I am putting this stuff up here so that when I post charts, you can understand what I'm talking about in there. I'm going to take this off so we can clean up our chart a little bit. I'm going to take this off, and I'm going to take this trade off from yesterday. We don't need any more of that currently. So here's our draw on liquidity. Our buy side draw on liquidity is here, and it doesn't necessarily need to reach up there. This is also these fair value gaps, all these imbalances from this big run down. All of that it's going to want to reprice and rebalance this area. But this is my anticipated draw on liquidity. You have liquidity down here and you have imbalances. So I would expect a retrace now that we've come out of here. I would expect some kind of a retracement back down into this area before we run higher. That's what I would like to see. And you can see on the 15-minute time frame here now, we're building up some liquidity here, underneath here and underneath here. So I'd really like to see it come down to grab this sell side liquidity. We'll just have to watch and wait. On the pound, on the 15-minute time frame, let's jump up here to the hour and see where so we've just cleared out this buy side liquidity. Our next draw is here and here. This is, I believe, a 4-hour. This is a 4-hour order block right here that was respected last time. They wicked above it, and it's okay to wick above it. It did not close above that 4-hour, this 4-hour order block. So be interesting to see. You've got liquidity up there. All of these swing highs are going to have your draws on liquidity there. So this one right here is the next one we'd be reaching for, and then up into this area. I don't know if it gets all the way up here to this order block today. We'll watch and wait. I would like to see a pullback either way. I'm always going to want to see if I'm bullish. I'm bullish on the pound and euro today. So I'm looking for sell side liquidity to get run before it runs higher. So we'll watch and wait and see what kind of run we get on sell side liquidity. And then if we can get some displacement higher. Gold, let me get all this off of here. I'm anticipating gold to be lower again. I would expect yesterday's high to stay in place. It's running some liquidity here right now, and maybe it just reaches back up into this order block. Maybe this fair value gap holds, but I would want to see some displacement now lower out of here. It's run liquidity here now on gold. It could come up a little bit higher and maybe up into here. And then if I saw displacement down, we could have another setup on gold, but we'll watch and wait. But that's where we're at today. That's kind of my analysis. So let me jump over here in the chat and scroll back up and see if I've missed anything. I don't think I'd missed much. Red Folder News 8:15 and 8:30 as well. This gold trade is somewhat similar looking to GU yesterday. Yeah, EU was way better. Do I journal my trades? If so, what software do I use? Hey, Muhammad, welcome in, buddy. Yeah, I'm journaling them right here on YouTube. I have my entire journal right here on YouTube. I don't have a specific software I used. I'm not trying to be sarcastic or funny about that. I am not a big journaler. I screenshot every trade, and I will look at them at the end of the day and just talk myself back through what I saw and why. But this is my journal. Like, I just go back and I'll rewatch trades. They're on Twitter. They're all there. So I don't have a specific software that I use to journal trades. All of my funded accounts have dashboards inside the Prof firms that have all my statistics, and I can copy those out if I need them. But no, I'm not a big journaler. I mean, I don't think it has to be this big in-depth thing. Know how many, I mean, if you're taking 20 or 30 or 40 trades in a month, I could see why journaling might be a bigger necessity for you. I'm only taking 10 trades a month. At the end of the month, I can recall almost every trade I've taken for this last month. I can recall exactly, because there's 10 trades, and I waited so long for those trades to set up and to form my mind is very clear on what happened. Like, I don't need to go back and review. Like yesterday, I went back and I reviewed why I made that mistake, but I had it. I had screenshots on my phone. Of course, I had it on Twitter. I went back and watched YouTube and before the stream ended to see if I was thinking clearly, and I was, and it did what I wanted. It just did not produce an A plus setup, and I forced an entry on gold, and that was a mistake. So yeah, no, I don't use trading software. I don't even know. Like I think for beginner traders, maybe it's good to journal. I'm thinking back to 4.5 years ago when I started trading. I'm sure there was a time I probably built out some Excel spreadsheets and I was meticulous about entering in every position and pair and time that I entered in. And I was like, man, if I just get all this, data, then I'll be able to see, I'll be able to just to dissect it all and figure out all my mistakes. It's not true. I'm probably in the minority of professional traders who would say that to you, quite honestly. Most of the guys I follow, they're always like, journal your trades, journal your trade. If you're not journaling your trades, then you don't know what you're doing wrong. And I'm like, I don't know. I know what I'm doing wrong. Pretty much right away, I know what I'm doing wrong. And I have my win rate. I know exactly how many trades I've taken. I know how many I've won, how many I've lost. And I know that I became profitable when I started taking fewer trades and I only took A plus setups. So yeah, there's the answer to that question. Again, here's our draw on liquidity for dollar. Our payout is on June 11th. I think that's a Sunday. Sunday, June 11th is when we're eligible for our first payout. So we have about, let me see how many trading days that is. How many trading days are left until my payout? I have today, tomorrow, and then 5 days next week. So we have 7 trading days left before I'm eligible for my first payout on this 10K funded account. So I'm not anticipating taking 7 trades. If we can find 3 trades in the next 7 days, that would be amazing. That would be awesome, because probably at least one of those or 2 of those will be winners. And that would be a great percentage gain. Heading into profit split. Good morning, Mod. Welcome in. Just talking through what we're anticipating. We're anticipating a little bit of a lower dollar. Draws on liquidity for the dollar here and then here, either today or tomorrow. Nice relative equal lows it's leaving behind right here. Pound is coming back down, engineering some liquidity there. So we just want to see a healthier retracement and some sell side liquidity being run that we can hopefully capture a move up. I need to go look. So TradingView is not putting every bit of red folder news on here, and I don't know why. I noticed that a couple weeks ago. Somebody just pointed out. I'm going to go over to the calendar here on MyFXbook and see what we've got coming up. All right, June 1st. Jobless claims. Yeah, that's important. Continuing jobless claims and initial jobless claims. Yeah, so here in about 35 minutes, we'll have some red folder news. It looks like coming out for the dollar. So we might get some movement out of that. 8:45. is the Global Manufacturing PMI, which is also Red Folder News, and then your ISM Manufacturing PMI at 10 o'clock. So we got some news coming in all morning this morning here. So we'll stream. I can probably stay on until, I don't know, probably similar to yesterday, till about the 9 o'clock hour, maybe a little bit after the 9 o'clock hour. We'll see how it goes. Just looking at some notes here. TradingView is running a flash sale, by the way. If you're looking to get out of just their basic free use, 30% off. Time is running out. They're offering a 30% discount on top of already discounted annual plans. You can get 6 months virtually free compared to paying monthly. So any of you guys out there looking to capitalize on some discounts and upgrade TradingView, you might be interested in that. Michael says, "Oh, thanks for going through the gold trade." Yeah, happy to break that down, and I hope everybody understands why that was not an A+ setup and the mistake that I made in pushing that out to everyone, and the mistake I made in not canceling my EU trade. That is not a good thing. That's why I even said it's not to be celebrated. It was lucky. I was lucky that EU trade hit take profit, because that could have been a massacre on our account yesterday. That would have sucked. You seen Bespoke made it 14-day payout for the first payout on all challenges without using any discounts. So it's permanently 14 days. Yes, I did see that. I'm glad they did that. I've been very happy with Bespoke. Their customer support has been awesome. The guys who run the company are in their Discord. They're active in there. They easy to get a hold of and ask questions. I have messaged back and forth with them, and they've been great to work with. They are continuing to improve and make the environment more friendly to the trader, while also still they have to protect their firm's risk. Like, they can't just they have to manage risk, and the way they do that is by implementing certain rules so that people aren't just gambling. And there's going to be some gamblers out there that get lucky and get funded, absolutely. But in general, they need to have rules in place that this is what prop firms have to do. They have to balance making it a good environment for traders to trade in, while also balancing the risk exposure they have as a firm. They cannot A-book every single trader. That would be dumb. So every trader that gets funded is going to start on a B-book. It's going to start on a demo trade. If you get funded, your first funded account, the firm is not copying your trades. They're not. They're not going to start copying your trades until you have proven consistently to manage risk and produce profits. And so when whatever algorithm they're using that identifies consistently profitable traders, that's when they start copying those traders' positions. But they also have the advantage of reverse trading bad traders. So they may not be A-booking your trades. They might be reverse trading. They might be fading you. If you're a bad trader who's failing challenges, every time you buy a challenge, they're turning on copy trade in the opposite direction on your account. And they're making money off of you from the challenge fee that you paid and from being wrong in the markets. So they have all that data on their back end, and they can see all of that. And so if they know how to manage risk, they're going to make money on bad traders. They're going to make money on good traders. But I appreciate Bespoke, to get back to the off that rabbit trail. I appreciate the way Bespoke continues to try to listen to their trading community and implement rules or reduce, you know, parameters on their accounts to benefit the trader. And so that's always a good thing to see. Coming into the 8 o'clock hour here, the hourly candle just closed, and you can see we've just had a big bullish run up. We've got some no wicks left behind on this hourly candle. You've had buy side run. If you get, like, if the next couple hours you get strong displacement back through here, you could turn bearish again. But I am more bullish. Basically more on the fact that with everything happening around the debt ceiling, it's going to take some pressure off of that bull run on the dollar. And it's going to bring some relief. We're also starting the month of June, and so you're anticipating, if it's going to put in a high on foreigns to go lower in that first week, the first probably 7 trading days of June, you would expect price to put in the higher low and then move off away from there. So that's pound. Euro, it did not have a bullish close on its candle. I would want to see these fair value gaps get reached back into here. Maybe with news, we get some of that. And we get some liquidity run down here before we get some displacement higher. So that's what we're watching for. Any pairs that you guys want me to look at, you can pop them in the chat, and I'll be happy to jump over. And if there's pairs that you're looking at or that you trade or you want another set of eyes on or another opinion on, sometimes that can be good, sometimes that can be bad. I tend to not be on Twitter or Discord or Telegram while I'm at the charts. I don't want anybody else's charts or opinions popping up in front of my eyes. I'll look at messages. If people are messaging me or talking to me, I'll look at that. But I'm not going to be getting on and seeing what so-and-so's bias is or what such and such mentor's view on Eurodollar is. I want to use my own analysis. I want my eyes to see what my eyes see. I want my brain to work it out. But if there's something that you want me to look at, you have a question about, or how I would interpret something, and that would be helpful for you, let me know. And I'll be happy to pop in there. Sam says, GJ. We're getting some movement down here, so that's good. That's the first step. You start seeing movement like this and you see price start moving towards liquidity. You're like, oh, I'm going to get a setup. You don't know. And this is a 5-minute chart here. So it would have to take a minimum of 15 to 20 minutes for a setup to play out, because you're going to need a couple of candles to reach into liquidity, and then you're going to need a couple of candles to give you displacement back up, and then you're going to need a couple of candles to come back to your entry. So don't get antsy and rush around and think, oh my gosh, something's happening. Price is moving. We got to be ready. Are you ready to push the button? Are you going to call trade? Settle down. There's nothing happening. If something happens, I will see it, and we'll call it at the appropriate time. Do you think you'll stick with this one setup forever now? This is not my only setup. This is the only setup I'm using for this. This is the only setup I'm going to use to demonstrate how, if you can have one setup that you master, you can take a 10K account to over 2 million in funding on this one setup. But no, this is not my only setup. I trade other setups on my other accounts. But I'm not going to get into that and talk through what those are because it has no bearing whatsoever on any of this. Nothing whatsoever to do with this. It is ICT concepts, but it's not strictly this. I will use this on my other accounts, but I have other entry techniques, and that's only because I mastered this one first. So, and now I've mastered two others that I will use to identify good setups. So maybe after we finish this challenge, I'll pick another firm and start with a 10K count and do it again and reach max funding with another firm, and I'll do a different strategy. I don't know. We'll see. GJ, Sam wanted to look at GJ. So this was my draw on liquidity down here. Someone had originally said, "Hey, is this a good spot to get in?" And I'd said, "Well, you're in an uptrend, so my bias is bullish. So I'm only going to be looking for buys. So I want to see sell side liquidity get run before I would want to get back into this market." And I identified, this was back on, what was this, Tuesday this week. I identified price was up here and it was starting to move back down. And I said, well, I want to see price run sell side liquidity and then displace up so that I could potentially get involved in a buy, not a sell, since we're bullish. So this was yesterday. We saw price come in, grab liquidity, come back in, failed to make a new low, and displaced higher back above this breaker. So on a 1 hour chart, if you were using just a 1 hour, we'll break it down to a lower time frame. 1 hour chart yesterday, 6:30, you see this come back down. It displaces back up through. It's not great displacement because it doesn't carry back on. It does give a break of structure, and it does leave a fair value gap behind. And you can see that fair value gap held. Price just kept rejecting off of it. It could not close below that fair value gap. On a 15-minute time frame, is there something better? Okay, so here, this is interesting here. So this would have been a little bit more of a cleaner setup for me. So again, you see displacement through, and then it continued on and it left a fair value gap. I would have targeted an entry down inside of this fair value gap. These three candles are your bullish breaker on the 15-minute. This would have been a good setup yesterday potentially. So 6:45 going into 7 o'clock hour, we get displacement through, creates a break of structure, leaves a fair value gap that's nested inside of this breaker. And so you would have been looking at an entry about, I don't know, somewhere around here, I'm thinking. And you could have gotten a sniper entry there. My stop would have been below that wick of that candle, and I would have targeted 1 to 2.15. Now, this probably would have been a break-even trade right here, because after it got wicked in, we would have moved to break even up here, and then would have come back down and wicked us out at break even. But that was a pretty decent setup on GJ yesterday. So now what I would be looking for is, if I'm still bullish, and pound should be bullish, I would want to see some buy side or some sell side liquidity get run and target these highs up here. This is your next draw on liquidity if we're going to be bullish. So on a 15-minute time frame, I would want to see price run some. I would want to identify some sell side liquidity areas that I would want to see price reach down into before I saw displacement in the opposite direction. You have a little bit right here, a couple relative equal lows here. I would probably want to see See on the 5 minute if anything pops out clear. Yeah, I mean, you've nothing super clear here. I mean, there's obviously draws on liquidity down here. This could be a good draw on liquidity for a little stop run and then flip up higher. It's just trending up nicely right now. It's respecting bullish order flow. I kind of would like to see, I think here's your run up. Higher highs, higher lows, higher highs. It's run liquidity here. My personal preference, whoever asked that question, I think it was Sam, I would want to see a deeper run of sell side liquidity here and then a very strong displacement up from that liquidity run, that stop run. So we'll just kind of watch and wait. I don't have a specific level in here that I would want to see hit, but I would just want to see a deep dive into some of this area, clear out some of these swing lows. If it could get down here, that would probably be ideal for me, I think. But at least deeper than where it's at right now. I want to get it more of a discount. I want to see price reach into a discount area first. So that's GJ. On the gold trade from yesterday, can you go over your entry spot? I know you went over it, but more specifically, I don't see the fib retracement area. I just want to understand why it looked good at that specific spot. Yeah, I'll talk through that again. Jack, is there a potential breaker entry on EU now? Breaker at 3 a.m. New York local. Let me hop over here and take a look. Getting a nice liquidity run here. I'm not sure what time frame. I'm going to try and look down here. Here's your 3 a.m. You're talking about these running liquidity, breaking above it. If it gets down that far, I'll be looking at a lower time frame to get in, but I'm not just going to enter right there. Jack, I will wait. I'm going to want to see some more confirmation, maybe on the 5-minute time frame of running higher. But it is moving and grabbing, and it's retracing. So, if you were going to pull an OTE, if you're going to pull a fib on the London low, ideally we would want to see it get below this 50% line. And if you do reach into that OTE area, it is in line with that breaker block right there. So, I mean, you're not wrong in what you're seeing. That those are breaker blocks. We had a run of sell side liquidity and then displaced higher back through it. This is where sell side liquidity was run because we started up here at these buy side, these bullish candles. So that's what we're watching and waiting to see how it goes. Excuse me. But it's nice to see price pulling back here. I'm glad it's pulling back. Same thing on pound. We would want to see you take the London low to the current daily high. This fair value gap lines up with that premium and discount value area. Similar breaker on pound here on the 15-minute time frame. These last two candles up, run liquidity, displace through. We'll watch and wait. Jump back over to gold from yesterday. Smitty. So the reason I took the thing off of here, but I can just talk you through what was happening. So as we see price come up and it ran the buy side liquidity that we were looking for it to run, I was targeting, I wanted to see displacement through this breaker right here. Let me see if I can. I hate it when my colors aren't what they're supposed to be. Breakers are teal for me on this color chart. So I wanted to see displacement back below here, leaving behind a fair value gap nested inside this. Okay. So as that happens, we get our displacement when the news hits. It closes below. And you have to remember euro is doing the same. Euro dollars, I've already got that in there. I'm watching it play out. And euro dollar, well, I've already talked through that. It may be better for you to kind of rewind back towards earlier in the stream when I talked through exactly why. This candle should have displaced lower. That would have been an A+ setup. But it didn't. It pulled back up right in. We broke through that breaker and then pulled right back up inside of it. And this is the fair value gap it left right here. The next candle does hit that fair value gap and drop down. And as this candle is closing, and I've seen that it's dropping back down, it's just before this candle closes, it has hit that fair value gap and fallen away. And an A+ setup would have been this candle displacing lower and then this candle reaching back up. That would have been your A+ setup, but it wasn't. And I was rushed. And so as I see this candle pulling away, I'm thinking, man, if it could come up and retest this fair value gap one more time, it's going to drop and run for this sell side liquidity under here. So that's where I put my short. And I had said if it gets back up into that wick area, the same wick area, and that's, I think, where we wanted, I think that's where we had everything. It was somewhere around there. It was about a 450 pip stop. So maybe it was like that, something like that. And so price is coming down here. That's when I tweeted out, here's my entry on gold. And I shouldn't have. This was not an A+ setup. This candle, the candle that breaks and displaces through right here, it should have some carry through on the next candle. And your fair value gap should be more clearly nested inside of here. There's a fair value gap, but the majority of that fair value gap is above that breaker. But I put it in there anyway. Made a mistake. It wicks us in. We stick around in profit briefly. And then that's when, about right here is when I'm looking at this going, yeah, that was a dumb idea. That was not an A+ setup, Brad. Why did you do that? And mostly it was because I was not in a good space while I was looking at these trades. I was trying to manage my Twitter and get the screenshots out. I was trying to get the lot sizes corrected because I wasn't here with my trade assistant. So I was using a lot size calculator on my phone, and it was all happening really fast. And made a mistake. I mean, that was completely human error. I did not read the chart right. I did not analyze it correctly. And because I felt rushed, trying to execute and get everybody the information, I called the wrong thing. This is not a good setup. It's not a good entry. And then you can see it pulled back down on this candle. I was like, well, maybe it's going to fall. At least maybe it will break these lows. We can get to break even. And then, yeah, I just rocketed up, slapped us. That's how it happened. Back at the murder scene, playing it all out. So yeah, it was a bad trade, man. It wasn't an A+ setup. This candle, after the candle that broke through, this candle should have displaced. It didn't need to come down super low, but it needed to be bearish. I would have wanted to see a bearish bar right here, a down close candle on this instead of an up close candle. But I saw that it had rejected that fair value gap, and I did not follow my rules, and mistakes were made. It happens. That's what I was saying earlier in the stream. I'm glad it happened and that I could talk through this today and show you that every trader is human. Every trader is going to make a mistake. It doesn't matter if you have a 6-figure funded account. It doesn't matter if you have a 7-figure funded account. It doesn't matter if you've had a $100,000 payout from a prop firm. You're still going to make mistakes. But if you have a good risk management structure in place, your butt's going to get saved. And the euro trade ended up saving our butt. We were fortunate that was not planned. It shouldn't have. It should have been canceled. That was also a mistake because of all the rushing around that I was doing trying to get everything up on Twitter at the time. So it's a great teaching opportunity for this live stream today to talk through the potential hazards that this all offers. What you have to be careful of when you're walking through all this. And you can see analysis was right. It was expected to go lower and take out that liquidity, which it did right here. We just mistimed it, and we did not wait for a beautiful, perfect A+ setup, and we paid the price for it. Fortunately, look at that. Ran liquidity, and we're getting some massive displacement down. Euro has now reached in. This is what a stop hunt looks like, so we're good. I guess news hasn't even hit yet, and we're getting this big pullback here. So pound has reached back, grabbed liquidity. Euro has grabbed liquidity. So we're getting some aggressive price movement here. Gold grabbed liquidity and has fallen away. There's really no entry here yet. Like there's not I don't see where I would want to target an entry here. I mean, this is your down close candle breaker. With these fair value gaps up here, I would not want to use this breaker, I don't think. That's too low. I'd rather see a breaker somewhere up here, and there's just not one right there on gold. Pound, this would be your breaker. We'd have to see displacement back up through this up close candle here. And euro, something similar. This is your up close candle here. So not even though we're getting our stop hunt and our liquidity run, we may not get a setup here. I don't know that I would say it takes a bigger priority. They just all have to be aligned. You want to see a fair value gap that's nested inside of the breaker. And that one was not nested inside the breaker. It was more above the breaker. And it didn't continue its displacement through that. Like it didn't have like so the things that I'm looking for are, I want to see displacement, aggressive displacement through a breaker that continues past it a little bit. It doesn't have to move like significantly past it. In fact, I don't want it to move significantly past, because then you're probably going to miss that whole big run and it's not going to pull back. It could just keep running. But I don't want to see it break that breaker and then immediately pop back up above it like it did on gold. So I don't know that I would put more priority on that fair value gap. They all have to work in conjunction together. And if they're not there, if it's like a key, it's got all the little teeth. And if you don't have all the teeth lined up, it's not going to unlock. It's kind of the same thing. They all have to work together to unlock an A+ setup. So, when price is falling like this and making a run on liquidity, do not try to guess where it's going to turn around. You could use a higher time frame breaker potentially as an entry. There may be people that do that. Like if you were thinking, here's your fair value nested inside this 30-minute breaker right here. There's a fair value gap nested inside this 30-minute breaker. So it could reach back down. It also lines up with an optimal trade entry fib extension from the overnight, the daily high and the London low. But this is a healthy pullback. It's reached back down into a discount area. We just don't have a very clear, we don't have a breaker set up really anywhere here yet. Gold is, all of these things are doing what I've called out. They're all moving in the direction that I was anticipating them to move. I had said at the beginning of the stream the gold was going to melt. It has grabbed buy side liquidity. We just did not. This would have been. This is the closest thing to a breaker. That's a 5-minute. There's nothing on the 15-minute here. There's nothing on the 30-minute. It's just a run up and an aggressive run back down. Yeah, nothing on the hourly either. So just very volatile action. And we still have news coming up in about 5 minutes. So if we could get a up close candle here, that then news drops lower and grabs and takes out these relative equal lows and then gets displacement through like an up close candle here or here, then we could get a setup there. That could potentially form a breaker on the 5-minute here. If this up close candle does in fact, it still has 5 minutes, it just opened. So, but as we head into news, if we get an up close candle, we get news runs more into this area and then displaces back above it, we could potentially get our setup off of that. Delete gold from my watch list. I don't trade gold often, Ahmad. That was the first gold trade I've actually called in that I've even entered on my account this whole month of May, last day of May. That's the first gold trade that I took. I think I might have taken one in April too. I don't trade gold much. Euro, this whole last month, euro and pound have been all you need. They have been trending hard. They've been moving perfectly in correlation opposite of the dollar. And they've given beautiful setups, quite a few beautiful setups this last month. So been a great month for Forex. For currency pairs. All right, so again, we've got about 5 minutes here, about 2.5 minutes until the news hits, and we are gonna. Looks like I would love to see these candles close up here. For gold, I would want to see run up and then break back through that. That could give us our breaker on gold. This could be a setup. So people are going to see that this is a break of structure here. And they're thinking, oh, look, and then it's running back up. And they're going to see another break of structure here. And this is going to be a stop hunt. And then you're going to see displacement back up above this. That's my analysis. And I'm not right 100% of the time on my analysis. That's what I'm thinking is going to happen here. And if I'm right, we'll get a trade opportunity. And if I'm wrong, we won't trade today. It's fine. I know somebody said they took that EU trade yesterday. Did anybody else take either of those trades I posted? The gold trade or the EU trade yesterday? Did anybody else use those trade calls and put those on your accounts? Man, allergies right now are killing me. Constantly feel like I have to clear my throat from the drip. All right, about a minute left here. The news is going to hit. A couple minutes. Oh, less than a minute. And it looks like we are going to get an up-close candle on euro, pound, and gold on our 5-minute time frame. So we'll watch euro here and flip around as we get the news drop. See what kind of volatility we get here. Good job, Michael. I think you're the one that said that earlier, or maybe there was somebody else. I think there was someone earlier today that said they got that EU trade. Maybe that was you already. I didn't know if there was anybody else in there that was following Twitter. Oh yeah, Jack. Good. A couple of you guys caught that. So, all right, news is out. Uh, it looks like it's very bullish for euro currently. We'll watch and wait. But this is the fun part of the market. This is what I love watching. Is again, I've said this before, man. I love watching how the market moves. I love watching these candles print. I love watching it and seeing how it uses liquidity and how it uses PD arrays and fair value gaps and volume imbalances and how it reacts off of those things. And I don't have to be trading to enjoy that. Like just watching the beauty of the symmetry of the market print out. It is wonderful. It really is. Learn to appreciate the way the market moves without interacting with it at all, just watching it. It will change the way you trade. 100%. It will change the way you trade. The only other breaker that I see here is we would need to see displacement back above these highs. And we might get that, and then we could potentially use this area here as a breaker. I'd probably be most interested in this 15-minute candle, as this was the up candle that ran sell side liquidity. If we get displacement above that, then that could turn into a breaker for us here. I would have really liked to see the news sweep lower and then give us a higher run up. All right. Wonder what the economic calendar. Let me refresh this, see what kind of data we got. All right, so our 4-week average jobless claims 4-week average, it was previously 232. The consensus was 229, and it was basically right at consensus. The continuing jobless claims consensus was 1800. It was 1795, so almost in line with that. Initial jobless claims, they were last was 230. They were expecting 235. Came in at 232. So jobless claims came in just a little bit lower than expected. Basically, everything was right in line with consensus, and that being the case, all things being considered, the news that's driving everything that people are most concerned about was the debt ceiling currently. With the deal being reached, you would anticipate a risk on scenario for the for indexes. So I would anticipate if they can get that deal done, you would see some higher prices on S&P, NAS, and US 30 potentially, at least in the short term here. Prices stalled out there. Holding on that 5-minute order block. Well, it's a nice reaction off of that. It didn't quite get down into the fair value gap. This would have been the unicorn if you were going to trade the 30-minute time frame. Most of my entries are on 15 or 5. I will frame setups and look for areas that I'm most interested using the 4-hour, 1 hour, 30-minute. It's really not a bad, like here's your 30, these two candles are your 30-minute breaker because you've run liquidity, displaced back through them, leaving a fair value gap behind, nested inside. It didn't get down into that fair value gap. So even if let's say this was a 5-minute time frame, I would have missed that entry. If this was a 5-minute time frame, and price displaced back through that, when this candle right here, these two candles, well, this was the candle that broke, and then this is the candle that continued the move and created the fair value gap, right? This is what did not happen on gold in the opposite direction. It pulled back. This is a valid setup. Let's say this is a 5-minute or 15-minute chart. I would have had my entry inside here probably somewhere, and my stop would have been below the candle that created the fair value gap and targeting right there. I would have missed that entry here. Now it could still come back down. If it cleared these highs right here, if it clears these highs, let's say this is, again, let's just go with me for the sake of demonstration. Let's just pretend this is a 5-minute chart. If price were to come up here and clear these highs out and I had an order here, I would cancel that order. It doesn't need to come back down. Once it runs more buy side liquidity and starts making higher highs, it doesn't need to come back down here. So I would want to see price, before it hits these highs, make another dig and get inside that fair value gap. Maybe something like that. Like a 9-pip stop. It's the beauty of 1 to 2, man. You hit those fair value gaps. You don't need it to run those highs. You just need it to retrace and pull back, get your 1 to 2 and get out, go home. But it's not a 5-minute, it's a 30-minute, and it didn't reach into that fair value gap. So there's no valid trade there currently. We might still get a run lower here into this OTE area. The news, we got some aggressive movement, but we haven't had any follow through yet after the news. So it could be just engineering liquidity for the 10 o'clock news. You know, it could just be carving out a range here that then it runs liquidity on one side or the other to go in its given direction for the rest of the day. It also, this could be the daily expansion, and we're just going to range around all day until NFP tomorrow. That happens quite frequently on the days right before NFP. You don't get much of anything. So I keep meaning to ask about, does all the candles in the break of structure have to be the same color direction? For example, all bearish, all bullish. Not sure if I'm quite understanding what you mean. Break of structure just means it's breaking a swing low and it's disrespecting so in this instance, it's a bullish order flow, right? Price is moving up. It's creating higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. It failed to make a new high and instead now broke below the last low and made a new low, broke below the last low, broke below the last low. So this is a change of structure. Is just a close below a previous swing low. It means it disrespected a PD array. It disrespected bullish order flow. And the trend, it appears, well, sometimes on these lower time frames, a break of structure is not as important as a higher time break of structure. Okay, the higher time break of structures are the most significant ones. A 5-minute break of structure, it can be important depending on where it is, but not every 5-minute break of structure is important. But that is kind of what we're looking at. I'm not sure if that answers your question. They don't all have to be the same color. I mean, it's breaking it's breaking a swing low and making a new, instead of it's reversing direction basically, and you identify that with a break of structure. So swing lows are being broken and closed below. Instead, they should be respected and pushing price higher. So when they are not respected and price pushes below them, they're being disrespected, they're being invalidated. So that's a break of structure. All right, so if we get some displacement here on the 15-minute time frame above this candle, that could be considered. I mean, they're engineering some beautiful relative equal lows right here. So maybe they're not done. They may not be done down here yet. But if it displaces above and you get a sharp continuation up, you could get a breaker block here on the pound. Euro, you see, is not having that same quite aggressive reaction above. And it still hasn't reached into these fair value gaps lower. So again, you could see relative equal lows here now. You could see a deeper dig, and then you get displacement from there. But we'll just watch and wait. We are watching and waiting. We are being patient. What's happening over on gold? It's run all the way back up now. And there's nothing interesting here for me on gold. I would need to see either another run on liquidity. It's just a lot of quick up, a lot of quick down, a lot of quick up. So that's not a fun environment to try to trade in. We would need to see some run on liquidity here. I would expect yesterday's high to stay in place. Maybe reach up into this fair value gap above this buy side liquidity that's resting up here, and then you drop. But who knows? Pound has run some liquidity here on the GJ. Somebody was asking about GJ earlier. I can't remember who that was. It has now taken a deeper dive into sell side liquidity. You would need to see displacement above these bars here if you're looking to trade a breaker, or you would want to see this trade lower and grab more liquidity and then displace above that and use that as a breaker. So this still has, it's still forming and still creating and engineering setups. There's nothing there yet. If you're interested in trading GJ, if that was you, there's nothing anywhere yet. Price is just carving out a range right now. We have relative equal lows here. We've got buy side liquidity here. Anybody else's wife text them while they're in the house. We are in a 3-story townhome, so I guess it makes sense. My office is down here on the lowest level. But I feel like she does that more than just when I'm, even when we're on the same level sometimes, I feel like she'll text me. All right. What do we see? Nothing. No setups. No setups. Engineering liquidity, carving out a range, perhaps waiting for the news at 10 to provide the final piece of the puzzle for us today. With NFP tomorrow, we also just may just be flat for the day and not get any trophy buck setups for us to appear. I haven't said this yet today, but if you guys would make sure you hit that like button on the stream, I would appreciate it. I'm not selling anything for anybody, but it can help the channel grow. It can help push this content out to other people. And I know that there's a lot more than 8 current viewers. I know there's a lot more than 8 people struggling to pass challenges, and this could be helpful and beneficial for them. So I would appreciate that. Also, I mean, feel free to tweet it out. If you're getting benefit from this, you guys may not have hundreds of followers, but you might have 10. You might have somebody out there that is interested, and you can tweet it out, the link. If anybody, I'll put this challenge out to the 10 viewers now up on the stream. If anybody can get ICT to show up here in the stream, I will buy you a challenge. I don't know what amount, 10K, 50K. I'll buy you a challenge. I'll pay for a challenge if you can get ICT to show up in our stream one day. Sorry, I'm texting my wife upstairs. But let's just say that's the official challenge, Gauntlet Throwdown. You guys are looking at UJ. Another pair that I don't keep on my watch list, but I'm happy to look at it for you. UJ. On the 4-hour time frame, I've had a run of liquidity here. Placement through, fair value gap, came back, rebalanced, hit that order block. On the 1 hour, we have kind of run liquidity there a little bit. Maybe just tapped into it and fallen away. So you've got this potentially as a breaker block right here. Let me just highlight that. So when we drop down to a lower time frame, we can see what's going on. 30-minute. Um, 30-minute, this could be a breaker here. You ran liquidity, you displaced lower, fair value gap nested inside of there. It did come back up. It did run that. So, but now it's run liquidity. 15-minute time frame. You have this would be your, all of these are really your breaker. But let me see. Let me drop down 5 minutes or something else. Man, it's just hard to say because you had a straight run up. Down close caused this up close. So you're talking about, I think you guys are probably looking at this 5-minute breaker right here. I'm guessing. You had displacement through, continued to lower, had a fair value gap. So potentially not a bad setup here on UJ. I would target probably this fair value gap is huge. So if I was going to be wanting to take that trade, I would probably want to see it come back, and I might even use this as my breaker. These 3 down, there's a small one right here, but these 3 down close ran up. And then I would want to see, if I was going to go short here, I'd probably want to see price come back up to about there. Put my stop either at the body or just above the candle that formed the breaker. So something like that. And then you would be targeting something like that. That's a potential setup. it's looking pretty good. It's not a bad. You did run liquidity. You've had displacement below fair value gap nested inside of a breaker block. So yeah, if I traded UJ that, and I had a, but that was very quick. That was a very quick 2-minute rundown analysis on UJ. So that is not a super in depth. If you're bearish bias on UJ, you think price is going to be going lower on UJ, which would line up with a bearish dollar, then that could be your setup right there. If it runs these lows out, maybe these lows, but if it runs these lows for sure without coming up to that entry, you would have to cancel that order. Yep. Guys, this is not a hard system. It does not take rocket science to see these setups. So, I mean, you could watch my stream for 1 day or 2 days, and you can see exactly what I look for and why. The trickiest part of this whole thing is understanding your bias for the day. But the reason I love the system is that my bias can be wrong, and I can still find a 1 to 2 trade setup that's actually against the true bias of the day. My bias, let's say my bias is long, but price is actually going to go lower. I can still find a setup that works in a long for a 1 to 2 and still be wrong on the overall bias for the day. So that's also another reason why I don't try to hold for 1 to 3 or 1 to 4 or 1 to 5 or whatever. Like 1 to 2, in case your bias is wrong, 1 to 2 is all you need to get every day. 1 to 2. That's my system. That's how I'm using this to trade. It's just running lower there, it looks like. Euro dollar is pushing higher. Pound is pushing higher. On the 15-minute time frame, again, I would want to see this 15-minute candle displace above here pretty aggressively before I would consider using this as a breaker on pound. And really same for euro as well. I would want to see displacement above this 15-minute candle before I would think about using that as a breaker. Hey, Steven. Didn't see you pop in there, but welcome. GJ looks like it is yesterday, Steven. You can go back and look at Twitter yesterday, but after we got off the stream, I called a trade for euro dollar, a sell on euro dollar, and then at the same time there was a setup that was beginning to form on gold, and I called an entry on gold that was not an A+ setup. In my rush to get everything out on Twitter, I was looking at things, and I made a mistake, and I called a gold trade. The gold trade hit stop loss, and I forgot to cancel my EU trade. And it did end up getting tagged in and hitting take profit. And so I had 1 loss and 1 win yesterday. But that is against my trading rules. I even anticipated, or I even thought about briefly, I'm not going to do it. But at one point I was like, you know what? I'm going to go in tomorrow. I'm just going to take a loss. I'm going to just get in, take a 2% loss, and get this thing. Like, I don't deserve that win that I took on EU yesterday because it was totally against my trading plan. I should not have been in that trade. But the trading gods were shining down upon me, evidently, and we got into it and were able to capitalize and get a 4% win. We took a 2% loss on gold, and then we got a 4% win on EU, so we're positive 2% overall on our funded account here. May I ask as to why the 3 a.m. New York local breaker was invalid? Only in that it didn't reach into the breaker. It didn't reach into the fair value gap, Jack. Uh, this fair value gap right here, this I would have been looking at the 30-minute time frame, and I would have wanted this fair value gap to been traded into right there. It never got there right now. It didn't reach down into it. It touched the wick of the breaker, but while that is, I mean, technically you could trade just a touch of the breaker. I want to see it reach into the fair value gap that's nested inside of the breaker. That's why it did not get down and reach into that fair value gap. Steven, if you don't follow me on Twitter, be sure to follow me on Twitter at Venator Trading, because I post any trades that we take off of the stream. I post them on Twitter. So follow me and make sure you have your notifications turned on. Otherwise, if I tweet out a trade alert, treat out all the TWs. If I tweet out a trade alert, you won't know it if you don't have notifications on. So, oh, I do. I have the notifications. Well, you should have seen. If you have that, then you should have seen the euro dollar trade alert and the gold trade alert on Twitter yesterday. Really? You can't see those on my Twitter. Let me jump over on my Twitter page here. Maybe I don't know. Let me look. I'm gonna bring that down. Here is my Venator trading page right here. So yesterday, this was the update where I tweeted out after everything played out, and I was tweeting about having bad luck and good luck. Here is the euro dollar trade update after it hit profits. I tweeted this and I didn't even know I had hit profits. When I tweeted this out, I did not even know I had hit profits. I didn't know I was in that trade. Yeah, here's the gold hitting the stop loss. Here's the gold trade alert right before it hit. That's where I put in my entry stop loss. Here is the euro dollar trade that I called. All of that's right there. So yeah, it's on my Twitter. I'm not sure why you're not seeing it on yours, but it's all there. Maybe it's something on your end, perhaps. I don't know, but it definitely is there. All right, so yeah, pound is displacing above, and we could be getting a setup here shortly. This would be a 5-minute breaker. There is no fair value gap nested inside here, so I'd be more inclined to keep this on a 15-minute time frame right now. On pound, euro, still we would need displacement above here, but we haven't gotten any of that yet. So euro is still cooking. Gold, we would need to see some run on liquidity here, and then displacement back down. So we're still waiting on all of these setups. Pound, it looks like, is giving us our most likely opportunity, looks like maybe on GBP today. USD is just running away. It looks like it may hit those lows. And if it does, if you have a limit order set here, you would probably want to cancel that if it clears out that sell side liquidity first. GJ, we would need to see displacement back above these candles here. Yeah, that's what we're doing. Hourly candles about to close. So this next 15-minute candle. Here's the thing with the pound trade currently is there's not a clean fair value gap currently nested inside of that breaker. So And there's not a good fair value gap nested inside anywhere in here either. We'll have to wait and see if this candle, the next hour, 15-minute candle opens and pushes up, and there's a fair value gap right here, and the bottom of this fair value gap stays open. Like if it doesn't come down and close in this wick test here on this candle, we get a push up and it leaves a fair value gap. I could see that potentially being a good setup there, but this candle is going to need to close bullish for us here and leave a fair value gap right here for a setup to form on pound. There's nothing on a lower time frame that would be of interest to me. Euro still has shown no displacement higher, so there's nothing there. Gold has pushed above slightly into the buy side liquidity there. I would want to see it maybe dig up into these imbalances up here. A truer dig into buy side liquidity and then displace lower. So it's starting to do that. So we'll have a couple candles here that are going to need to print before there's any kind of setup being formed there. My doodles are coming downstairs and they're going to need to do their business. So guys, I'm going to just, I'm not going to go anywhere. I'm just going to close the camera and my mic here for a second. I'll be right back. All right, we're back. They were quick today. They are often not quick. Yeah, Michael says I wouldn't mind EU chopping for the next hour so the news can make the displacement. Absolutely. You can see it's just clearly carving out. It's leaving buy side. It's leaving sell side. Make a dip back down into that 30-minute, that gap inside that 30-minute breaker. That would give us a new breaker perhaps on a lower time frame, displacing higher. So yeah, absolutely. I would agree with you. Would love to see that as well. I'm probably going to stay on for maybe another 15 minutes or so. Not too much longer. Open that back up. I kind of want to see how this pound 15-minute candle closes out here. I'm interested in that. Gold is running buy-side liquidity now pretty aggressively. So we might, gold is flirting with us as well. Is she gonna be nice to us, or is she gonna treat us dirty like she did yesterday? And she didn't really treat us dirty. I fell for her games. That's what it was. She lured me in, and I I just got suckered in by the siren of gold and made a horrible trading decision. Not horrible. It's just a mistake. I don't want to like over dramatize it. Like, it happens. You make mistakes. How's that UJ? Yeah, it's running those lows. If you had a sell limit on UJ up there, those guys are looking at that. I don't know. I would probably be canceling that. Um, if you were looking for a retrace, I don't know that it. Yeah, at the news, maybe it does get a pop back up there if you want to leave it. I don't know, but it doesn't look like it's going to want to run that high again. Gold pushed pretty hard. Again, dollar is, this is our draw on liquidity, and you can see it's reaching for that pretty good. It's making a run down here. Pound is displacing back above that high. We still have about 9 minutes here left on this candle, so there's still quite a bit of time left. But there, it is going to leave that fair value gap. Hopefully, might leave that fair value gap there, and then that would give us a valid breaker here as it ran sell side liquidity, displaced above it. I really wish there was a nice fair value gap here on the 5-minute time frame, but there's just not anything to target there. You guys that have been here now for the last few days and kind of been hanging around, what are the things that you has this helped you at all? Like, I would be interested to know, is watching this and being here, is this being helpful to you? Has any light bulb moments gone off? Have you learned anything? Because if you're not, I would probably want to change something up on what I'm doing to be more beneficial. But any feedback you have so far on how, if this has been helpful or not, would be good to know. And not in any, I'm not fishing for a compliment. I'm really looking for honest, like, hey, has this been helpful? If it is, good. If it's not, then I need to change something. Jack says yes, good. Is there anything specific, Jack, you can point to that's been helpful overall? Yeah, the patience. I think that's honest to God, I think that's probably the number one thing that people who can't pass challenges or are struggling to pass challenges is probably the one thing. If they could just do that one thing, most everything else would fall in line. If you could just sit and wait. I am not in any hurry to push a button. That being patient and waiting for your setups to form is the difference between an amateur trader and a professional trader. You want to be a professional, you've got to sit and wait. Yeah, looking at Sean Breaker's daily bias. Daily bias is probably the thing that took me the longest to really grasp how I would determine what my daily bias would be. It's the most subjective analysis, unfortunately, because if you can get your daily bias right and you're only taking trades that line up with your daily bias. So if your daily bias is short, bearish or bullish, whatever your bias is, you're only going to take a trade setup if it is in direction with your bias. But getting that bias, learning, really getting a good grasp on what your bias should be. For me, maybe it's not so difficult for others, but for me, that was one of the more difficult things. That was kind of one of the last little pieces for me to click into. And what I really had to come to grips with was that I'm not going to be 100% correct on my bias, on a daily bias. You can't be. No one's going to be 100% correct on their daily bias. But that's why having a 1-to-2 risk reward ratio and moving to break even at 1.5R will save you. Because if your bias is wrong and you get a setup that it's a breaker setup, but it's not in line with your bias, price will often get you to break even before it reveals itself and proves that your bias was wrong. Or it might even just give you a quick 1-to-2 and then reverse, and your bias was wrong for the rest of the day, but you were able to capture 1-to-2. So 1-to-2 is kind of my safety net for if my bias is wrong. I can still find a valid setup and be trading against, not intentionally, okay? I'm only going to trade in what my bias is, but the true bias of the day, I might be trading against the true bias of the day, but that 1-to-2 risk reward is kind of my safety net that allows me to capture a win if I'm still wrong about my daily bias. And if I'm right about my daily bias, I'm still going to get my 1-to-2 and I might miss out on a longer run, but I don't care. I don't care because there's no guarantee that my bias is going to correct, and there's you don't know where it's going to go. You don't know how low it's going to go after it hits your take profit, or how high it will go after you hit your take profit. Hey, Corey. Welcome back, buddy. Missed you yesterday. So our pound 15-minute time frame, it is now closing bearish. I would have wanted to see it continue to displace above, and it's also trying to reach in and close in that fair value gap. So I don't think we're going to have much of a setup there. What's gold doing? Look at that displacement on gold. That's nice. You see it run buy side liquidity, and now you're seeing displacement lower. So if gold is going to give us a valid setup, it would need to displace below this 5-minute candle, because this was the last down candle that ran buy side liquidity. So we would need to see gold displace below here and keep coming, leave a fair value gap before it dropped lower. Oh man, I hope your grandma's okay. But good for you for being the grandson that gets her to the doctor. Way to go, man. But I'm glad you're back. It was a crazy day yesterday. We're 2% up overall. We had 1 win, 1 loss. It should have just been 1 loss. We should not have had the win. It should be 0, 1, and 0 down there in those stats. But I'm not going to look a gift horse in the mouth. It worked out in our favor, and we picked up the win. Erased our 2% loss and picked up an additional 2% on that win. So my wife is bringing me some coffee, and she is not going to want to get on camera, so I'm going to close that camera off for a second. She made a Starbucks run for us. We usually make our coffee every morning, and I woke up this morning to make coffee, and we were out. So, and Mama's not happy when there's no coffee in the morning. Ooh, that's hot. Let's go back over here to pound. It's closing up. It closed in that fair value gap. So there is no setup here on pound. We did not get continued displacement above, and it has completely closed in that fair value gap. So there is no trade there. Euro. This will be my last little spiel here. Euro is engineering liquidity, and we're going to get some news here in the next 45 minutes, but I'm going to be off the stream by then. I don't know how many YouTubers would say they shouldn't have that win. I shouldn't have had that win. I did contemplate, Steven, I contemplated like coming in here this morning and taking a loss to wipe it off, because it almost feels a little dirty to me that we won that trade, because it's completely against my system. That trade should have been canceled, and I did not. And when I tweeted out that it hit profit, and congratulations to everyone who hit profit, I had no idea that I was talking to myself at that time. So it was a true, complete mistake. And it could have been a mistake that burned us. We were just very, very fortunate that it worked out in our favor. So again, I'm not going to look a gift horse in the mouth. I'm 2% up in profit on a funded account. When this is a $2 million account, 2% profit is 40 grand. So I would definitely not turn that down. And God, I can't imagine making that mistake on a $2 million account. That's a punch in the gut. All right, guys, we've talked it all out. We know what we're looking for as we get off the stream. We know we've got news coming up. We know exactly what we're looking for. I've talked it all out. Follow me on Twitter. Like this, please, stream. If you haven't already, please hit the like button. I would appreciate it. It does help out people. It does push out when it knows what you look at, and it knows, hey, this guy's like this guy and this guy like this, so maybe someone else will like it as well. So gold, again, if we get displacement below here, we could get a setup here on gold. Pound, we would need to see, there's just no setup on pound right now. Euro dollar is the only place that it could still give us a run on liquidity and then displacement up. So those are the setups we're looking at. Follow me over on Twitter. But for now, enjoy the rest of your day, guys. And we'll see you back here tomorrow, NFP day tomorrow. So we're going to have fun watching what happens with that. But until then, be safe. We'll catch you later.